I'm going to welcome everybody to this webinar on taxes on your side hustle. Ray Tokar is going to be our presenter today. Matt is also here from Donnelly-Boland. These are our good friends that do business consulting for all different types of businesses, whether solo practitioners or much larger businesses that have a wide variety of types of businesses as well. They represent a lot of different people offering a variety of services to them. So they've got a wealth of information to share with any small business owner out there, because they've talked to thousands of business owners and they've sort of walked, a mile in your shoes, so to speak, except they walked a lot of miles in a lot of people's shoes. So they have a lot of information to share with you to make you wiser, in operating your business. And I think that this webinar really comes at a great time because, we've got the economy where, although wages are up, inflation is up, people are feeling the squeeze when it comes to their buying power. And so having a side hustle might be something that a lot of folks are really interested in picking up right now, or maybe they're continuing to do it or haven't done it very much, but they want to kick it into higher gear as they are looking at the end of the year into fourth quarter and planning into next year. So now I think is a really opportune time to be talking to people that have a side hustle. Maybe you're a gig worker, maybe that you're an influencer and you're trying to roll your business out as a social media influencer. Maybe you are a Legal Shield sales associate. We know lots of folks attend these webinars that are associated with Legal Shield and have a side hustle for your business. So that's what we're here for today, is to share some tips and tricks and information about your side hustles to help you make more informed decisions. So with that, I'm going to hand it over to Ray and Matt.
Hi, everyone. So I'm Matt. I work at Donnelly-Boland. Like Mike said, we have been doing this partnership with Mike for a number of years now. And before this partnership of presenting these different seminars, we've had a long-standing relationship with Mike and his group. They do really, really wonderful work, and we're happy to be a part of it. In terms of today's session, we try to make these interactive sessions as fruitful as possible for everyone. We try to be respectful of people's time, so we really try to get through a lot of information in a short duration of time, but also we want to hear your unique perspectives. After this session, we're going to be putting this up on YouTube. You'll be able to access it later and other people can watch it. But the benefit of being here right now is that you can ask questions and you'll get real-time answers. Ray is a CPA. He has a wealth of knowledge. He really understands these concepts. And what separates Ray from other CPAs is that he's able to walk you through things and get you to understand them. Ray's been with Donnelly-Boland for 8 years now, right? For 8 years now. And what has really made him to be an excellent controller for us is that he can work with clients and really try to nitpick things and say, okay, where can we get to? What do we need to do? And I think that having that hands-on perspective really helps. So there are two different ways that you can communicate with us in this webinar. One is the Q&A pod, and the other is the chat pod. Q&A pod are direct questions. This is a question that I have. Let me ask this. If it makes sense, Ray will either see it or we'll stop him to answer these throughout the session. Or if you're just adding a comment to other things that are going on, please feel free to add it to the chat pod. That way we can keep this kind of camaraderie around everyone. At the end of this session, we're going to be sending out, the link to this, as well as an incredibly brief survey for seminars for the future, what you liked, what you didn't like, what you want to see. Right now, we're starting to get into programming for 2023. I know 2023, but your opinion matters. So if you want to see some different things in 2023, please take the 2 minutes to fill out the survey. We really listen to you. We actually take those in consideration when we're doing the programming. So, let your voice be heard. Otherwise, I'm going to be kicking it off to Ray. We'll be here the whole time. Make sure to ask your questions, ask things in the chat, and really try to enjoy and try to take up as much knowledge as you can from him right now.
All right. Thank you, Matt. Again, my name is Raymond Tokar. I am controller at Donnelly-Boland and Associates. Again, I've been here for now 8.5 years. I grew through the ranks and everything there, and I work with a solid 15, 20, even 25 different clients on a daily, weekly, monthly basis, depending on what they need. So I work through all of these different types of things. So if you do have any questions, feel free to ask them while I'm going through this. So let me share this screen here. And then let's pull up all right. So, yep, I just wanted to, again, thank FIFIC Law Group and Mike itself for the continued partnership and through these webinar series and everything like that too. So let's get into it. So I'll be talking about taxes for your side hustle today. Many different things to talk about through this. To show you, we're going to go through some tax forms. There's 5 different tax forms that are involved when you have a side hustle or a gig. I'll touch base and show you those actual forms as well that you will need to use. Second, I'll discuss some additional deductions that are allowed when filing your taxes. The main one I will discuss in more detail will be the home office deduction. The third item to discuss in today's webinar will be the self-employment income and taxes. What does it entail, how to calculate, and other ideas. The fourth item would be estimated taxes. We will discuss how to file, again, how to calculate, when to file, and is there any penalties if you don't file your estimated taxes in a timely manner. The fifth item will be tracking all income and expenses properly. I'll discuss the different types of software, some tips to help track, and a few items. The last item I want to discuss is the different type of entities that you can set up. And I'll tell you about the advantage and disadvantages of each of those businesses. So there's about 5 of those to discuss as well today. So I always like to start with a poll question. So let me pull that up now and I can launch it here. Just wanted to get everyone's thoughts on did you file 1099s for 2021? Just wanted to see if in the audience who knows about 1099s, if you did them, if you don't know, just wanted to see what everyone's thoughts are, because these are part of the tax forms that I will be talking about in the next slides. So. Give everyone about 10 more seconds, and then I will post the results and we can move on. All right. You can see about 42% of people have filed them for 21, 47% did not, and about 11% of you don't know. So again, I'll definitely show you what that entails and what that to go through, what you need to do for those items. So tax forms. The first 2 tax forms that I would like to discuss is the W-9 and the Form 1099. The W-9 is really the form that is requesting the taxpayer identification. You will usually submit a W-9 form when you engage with a company where reporting information to the IRS might be necessary, such as receiving payments for services you provide as an independent contractor. On the W-9 form, you will provide your business name, business address, type of business entity, which I will go through in more detail later in this webinar. The business EIN, or if it's just a sole proprietor and you're all by yourself, you could actually use your personal Social Security number on there. And then again, you will sign in part 2, the certification section attesting that the information is correct on the form. So the W-9 prepares an individual or business to know if they will need to send out a Form 1099 at the end of the year. Those are due by the end of January. So the Form 1099 documents, there's different types of payments made by individuals or businesses. These are the forms that you will normally receive if you're running a side hustle or side business. A good example would be an accountant completing some bookkeeping for a company that needs some help. That accountant could be just an individual or sole proprietor that's just helping on the side to help businesses. The business that the accountant completed the work for will compile and add up the amount of payments made out to the accountant throughout the year. If that amount is over $600, that business must send that individual a 1099 NEC form, and again, by January 31st. There are many different types of 1099s, but the two that I'll discuss today is the NEC, which is non-employee compensation, and the miscellaneous form. The 1099 NEC is used to report independent contractor income. It's like if they were an employee, but really they're just doing it independently, and you can't control their hours or anything like that. That's what the NEC is for. Where the miscellaneous form is still around, and it's used to report like miscellaneous income like rents and payments to attorneys. When you receive these forms in the mail, you'll file them along with your tax return. So let me, I actually have the forms here. So let me undo the PowerPoint. And so here's your form W-9. The W-9, again, like I said, is your name, business, if you have a disregarded entity name. But then again, you can list out what entity type you are here. And then address, city, state, and then down here is your social security number or EIN, depending on if you have a business EIN or not. And then again, you will sign the certification saying that everything is correct up here in the boxes. So that's your W-9 form. You should be requesting that anytime that you're paying out to an independent contractor or any different type of company. When you pay out to a vendor, you should ask them for a W-9 so you can follow the rules and be able to be prepared for year end to do the 1099s. So again, the next form I talked about was the 1099 NEC form. This form, again, is the non-employee compensation. They just brought this form back, I think about 2 years ago, 3 years ago. It used to be on the miscellaneous form, but they wanted to separate it because there's a lot more NECs than there are miscellaneous forms being sent out. Again, on here, it's pretty much what's on the W-9, but the big thing is the compensation itself and the income tax if you are withholding any taxes for that non-employee compensation. So that's why you need the W-9, so you'll be able to fill in these boxes. And then just hit it quickly. Here's the miscellaneous form. And again, you can see there's a lot more categories. Again, it used to be here saying non-employee compensation. They just updated this form, and you can see the big items on here are rents, the payments to lawyers and that kind of stuff, gross proceeds paid to an attorney right here. Those are the two big items that I use for my clients to pay out. So, all right, let me go back to the PowerPoint now. Any questions? I just want to make sure if there's any questions.
Hey, Ray, can you talk about the payments to lawyers again? I like that part.
Yeah. So making sure that you're paying your lawyers. Yeah. It's just making sure you pay them and then you keep track of those for sure. But then as well, get that W-9 from them. Because again, the 1099s are only needed to if they are sole proprietor or partnership. But again, all lawyers should get 1099s too, just so they can keep track of all their payments as well. So definitely. All right. Moving on. So the next, I have 3 more tax forms that I would like to talk about here. And those would be the 1040, the Schedule C, and the Form 8829. I would believe everyone knows the Form 1040, which is obviously your individual tax return. Maybe you don't know the names and all that kind of stuff, but that's what you're filing your individual taxes on. Everyone must file this return unless you make less than the standard deduction for that tax year. Still better to file your tax return if you had any federal tax withholdings, and you can get those back if they're under standard deduction. Now, on that on the Form 1040, if you are a sole proprietor, there is a section called Schedule C. This is only used if you operate a business as a sole proprietor, like I said. The Schedule C is used to calculate the business's net profit or loss for income tax purposes. There are many deductions that are allowed to be taken on the Schedule C for income tax purposes. And again, I will go through that form. I have it, and then as well a few deductions from that form as well, and go through those. And then the last form, the last tax form I would like to discuss is the 8829. This form consists of expenses for business use of your home. So you can take home office deductions if you're operating your business out of your home. There are rules in regards to home office deductions, which will actually be the next slide. So we'll discuss that in more detail. So before I move on to those, I would like to show you those exact forms again from the IRS. I already have them up here too. So the Schedule C, again, this is Schedule C from the Form 1040. Here, again, this is going to be the name of your name itself, your social security number, everything like that. Then down here, it'll ask you for your accounting method, all those types of things. And then here is your income from your sales or whatever you're selling or services or anything like that. So you put that in there and there's your gross income. Then here's all the expenses that you could capture to offset that income and ultimately get you down to your net profit or loss down here, which will again flow up into your 1040 and it'll be part of your taxable income. Form 8829. This is the expenses for business use of your home. Again, this is just I just wanted to pull up the form, not to go through them in too much detail, but ultimately it'll tell you what part of the home is business related and what part of the home is personal related. And you can come up with your percentages and ultimately get how much of expense you could be able to deduct on your personal tax return for your side business. All right. So the next item I want to talk about, like I said, is home office deduction. So home office deduction is where taxpayers claim a business deduction for expenses related to a qualifying use of all or part of a residence for business conducted in a home. Okay, so I want to talk about eligibility here. That home must be one of the following. It must be a principal place of business. It's a place where you can meet patients, clients, or customers in normal, ordinary course of business. It needs to be a separate building, not attached to the home where ordinary business is conducted. And if the home is the only fixed location of the business, a space that is used to store inventory or product samples. So there's two different ways to be able to calculate the actual home office deduction. So I'll go through the first one. They simplified it about 5 years ago, which streamlined the calculation, made the record keeping requirements simpler. You can take allowable square footage of the home used exclusively for your business. It cannot exceed 300 square feet, and multiply this by $5 per square foot. The deduction cannot exceed the gross income of the business minus the business expenses, and any amount in excess will not be permitted to be carried over. So for this method, it will be part of your Schedule C. The other option is the full calculation method, which is by calculating the percentage of the home used for business. So again, it's business divided by your total home square footage. Then determine your actual expenses. So that could be utilities, taxes, insurance, anything like that. Records of these expenses need to be maintained. So make sure that you always keep your records. So then you multiply by the percentage of the home office by the actual expenses for the total home to determine the balance of the deduction. Again, deduction cannot exceed business gross income less business expenses. However, the amount in excess of gross limitation cannot be carried over, unlike in the simplified calculation. It can be carried over. Again, like I discussed in the last slide, to complete this full calculation method, it would have been that form 8829. And then last thing I want to talk about is the additional deductions that are offered. So one item next, the big one that I want to discuss is in more detail on the next slide is self-employment tax. But again, you can get a deduction for that. You're able to deduct up to half of your self-employment tax on your tax return. So ultimately, this is the portion that is deductible that a normal employer would pay on behalf of the employee. So normally the employee and the employer will pay half. Again, I'll talk about that more on the next slide. And then to talk about a few, the next deduction could be car expenses. You can deduct up to 58.5 cents per mile for using your vehicle for business purposes. And then again, the federal government just updated that standard mileage rate as of July of 22 to 62.5 cents per mile. And that's mainly due to inflation. I've never seen it go up in the middle of the year since I've been doing this work. But again, you can always see the first, but I'm not against it because I travel to many different clients as well. And I get that 62.5 cents per mile. Another deduction would be your phone and internet expense. As long as they're being used for business purposes, you can deduct the cost for those items. Again, same as travel expenses, as long as you're traveling for business purposes on flights or car transportation, rental cars. Again, those are all allowed deductions. You can deduct advertising expenses. Again, these would be examples like Google or Facebook ads for your business. Again, any advertising type things. And then depending on your retirement plan, you can deduct those contributions as well. Again, there's many different types of retirement plans. There's IRAs, 401ks, SEP plans. And again, each one of those you have limits on how much you can deduct, but they grow significantly depending on which one you are in. Another deduction that is allowable would be business insurance, like general liability. And then again, you can deduct meals and entertaining clients, like taking them out to lunch or dinner. And again, those were increased 100% due to the CARES Act and all that kind of stuff, but then they are going back down to 50% deductible. And then the last item to discuss would be health insurance premiums. So again, for yourself, your spouse, or even dependents, you'll be able to deduct those premium costs for tax purposes. The big thing that I always like to mention is to keep your receipts for everything, backup for everything, save them on your computer, save them on a drive, keep them in a file folder, whatever you need to do. These are the deductions that the IRS loves to examine and very closely and will disallow if you don't have backup for those expenses. So next, I have another polling question. The polling question, it entails self-employment, income, and tax. So I just wanted to, let me pull that up here. All right. So do you know how much FICA tax you owe on self-employment income? So a lot of people, if you're an individual, you're going to be paying that self-employment income. But if you're an employee, you technically only pay half of it. So I'll give you guys a little bit of time here, and then we will move on to talking about self-employment income. And as you guys are answering, I will double check the chat to see.
Ray, it seems like right now, Mike and I cannot respond to other people in the chat, and I don't know why.
You can't see their names, or you can.
No, we literally can't respond to them. So
oh, in the chat, yeah.
Yeah, it's saying that we can only respond to host and panelist. So when Mike was typing things, it is only going to us.
You're good to go. You should be able to do it now.
There we go. Didn't want to break your stride earlier.
I understand. No worries. That's why I'm like, the polling questions are a nice place to stop and be able to look at questions and everything too.
Yeah.
So I see one question from Joyce here. Do you need a separate business phone, or can you use personal phone? So again, depending on what you're using your phone for, if you think you're using it for about 50% of the time, you should be able to deduct up to 50% of that phone. So you got to be able to distinguish between what is business and what is personal. That's the big key there. If you're able to show that difference, then yes, you should be able to deduct any business related cost for that phone. So just wanted to give you that update there. So for 2022, so yeah, I see Mike. For 2022, business meals are fully deductible. I'm not directly in the tax field. I'm not doing tax returns. I thought it was 2 years. I don't know if they extended it. I don't know if I think it might have turned off in 22, but I'm not for sure. I can definitely look that up and give you guys a clearer answer there, just because I'm not doing taxes directly. I will say that. So. Yep, there's another one. George right here. When does the CARES Act expire on meals and deductions? Let me get back to you on that, and I will for sure give you an answer towards the end of this. Even whenever Matt and Mike are finishing up, I'll look it up very quickly and I'll give you guys that answer at the end. All right, so let me end the poll here and share the results. And about 26% of you know how much you're paying FICA tax for self-employment. 48 don't are no. And again, 26 is they don't know. So again, we will go through that next here. Give me a second. All right, so self-employment income is income that arises from the performance of personal services, but cannot be classified as wages because of the employer-employee relationship does not exist. A self-employed person is free to structure his or her life around their own resources and schedule, whereas an employee is dependent on the specific company's resources and has to work on the company's schedule and time. Some advantage of being self-employed would be that you are your own boss, you have more opportunities to earn money, and is on your own time and schedule. But some disadvantages of being self-employed would be paying more taxes, potentially multitasking, because again, this is your business, it's your income, and as well, it's could be unsteady pay depending on what you're doing. So in regards to taxes, self-employed individuals would have to pay the full amount of self-employment tax, while a portion of the employment taxes are paid by employees and the other half is paid by employer. So self-employment tax includes Social Security and Medicare. The total tax is 15.3%, which breaks down to about 12.4% for Social Security and 2.9% for Medicare. You must pay Social Security on the first $147,000 of combined wages for 2022. Once you hit that max, you'll no longer have to pay Social Security in that calendar year. So 147 is your maximum there for your 12.4%. There is no max for Medicare tax though. Once you hit a certain threshold though, there is an additional Medicare tax that increases the rate an additional 0.9%. So just to be aware of that, I think it's married filing jointly is over 250,000, but those are all on the IRS website if you need to see them. Now, calculating those self-employment tax, the federal government created a Form SE, which again, self-employment. This Form SE will then report on your individual tax return on Form 1040. Remember, this tax is in addition to your regular income tax rates for federal, state, and local. So this is on top of everything there. Again, if you were an employee, though, that 15.3% is really cut in half. You're only paying, as an employee, you're only paying 7.65% of Social Security and Medicare. And then the employer actually covers the other half of that 15.3%. So that's the difference. If you're self-employed, you pay the whole amount, where if you're an employee, you pay only half. So good thing to know there. So let me pull up the Form SE real quick. right here. So again, this is your self-employment tax right here, and it breaks it down into many different categories here. But there's your maximum Social Security. Again, this is the 21 form, which the max Social Security was 142.8 there. So you enter all of your profit and loss and all that stuff into here, and then ultimately you come down here and you can multiply it out by 15.3%, or there's your 12.4 and 2.9. And then right here, there's your deduction for 1/2 of self-employment tax. That's the deduction you're allowed to take on your 1040 if you're a self-employed individual. So there's extra rules if you're a farm or non-farm, all that kind of stuff. I'm not going to go into that today. All right. So before I get into actually calculating and working through estimated taxes, I have another poll question here. And again, it's in regards to estimated taxes. So let me launch that up. So the question is, are you set up to make your third quarter 22 estimated tax payment? Because guess what? It's in 2 days. That's when it's due. So I will go through more details on that, but just wanted to see if anyone's ready for it, or they don't know what they're doing there, or they're not ready for it because it's coming up quickly. Those quarterly estimates do happen very quickly. All right, I'll give you guys 15 more seconds and then I will share the results. All righty. So 14% of you said that you are ready and set up to make that third quarter. 55% of you said, no, you're not ready. And 32% of you don't even know. So we will talk about it and hopefully you will know after I go through it. All right, so to go through estimated taxes, the things that I want to talk about are, I wanted to go through thresholds that will trigger you to file estimated taxes, the frequency, how to calculate, and are there any penalties if you do not file, and how you actually file and pay your estimated taxes on your behalf. So the federal tax system works as a pay-as-you-go system. So the IRS would like everyone to pay their taxes throughout the year, instead of it just being one lump sum at the end of the year. That's the big key. That's why they want you to make estimated tax payments. In regards to the thresholds, you are not required to pay estimated taxes if you owe less than $1,000 in federal taxes. So that's the first thing. Second, income tax withholding will add up to at least 90% of your total you owe for the year. So maybe you're an employee at somewhere else and this is your side hustle. If your W-2 withholdings are going to at least add up to 90% of your total that you owe for the year, then you actually don't need to make any more estimated. And then as well, or at least you pay 100% of the total tax paid on your prior year's return. That's the three categories that the IRS wants you to hit or fall under if they don't want you to pay any additional estimated taxes. If you did not file a tax return as well in the prior year, you are also not required to pay estimated taxes. Just a little snippet that I wanted you guys to know. So now I want to talk about the frequency. You probably already guessed it, but the government would like you to pay at least quarterly. I've mentioned it probably a couple times already. So the first quarter of the year, those estimates are due on April 15th. Again, that's when your personal tax returns due. But again, if you didn't pay your quarterly taxes or estimated taxes the prior year, your April 15th payment could be pretty high because you owe last year and this year. So something to be aware of. The second quarter is due on June 15th. Note, you can notice the second quarter is only 2 months after the first quarter. I don't know why they do that, but the IRS wants it in 2 months after the April 15th. The next quarter is due September 15th. Again, that's 3 months after. But then again, the final quarter or year end is due January 15th. So that's the key there. So then they give you 4 months to figure that all out. But they want they would prefer you have as much paid in as possible by January 15th. Now, if you're extending your personal taxes past April 15th, the big key is to make sure that you pay everything that you know of by April 15th, or they will penalize you even more from there. So based on the best way to calculate your estimated taxes is by using the form 1040 ES, again, estimated taxes. The tax form will help you calculate your tax due for the year and use the tax rate schedule to determine how much you owe. The big thing you will need to calculate on your own will be your total gross income and subtract any allowable deductions on those expenses. So really you want to estimate how much gross income and really net profit or loss you're going to have throughout the year. To help with this step, it might be very helpful to use your income deductions and credits from your prior year as a starting point. Again, if you pay 100% of those taxes, you're pretty set for the year. On the form 1040 ES, there are payment vouchers that you can print out and file with your tax records as well. So I'll pull that up once we're done talking about estimated taxes. Now, if you do not make the necessary estimated tax payments, you will owe a penalty for underpayment of estimated taxes. The penalty starts out at 0.5% of what is owed for each month or part of a month the tax remains unpaid. The penalty cannot exceed 25% of your unpaid taxes. A tip, if your income is uneven throughout the year, you may be able to reduce the penalty by annualizing your income and making equal payments throughout the year. And then how to file and pay. So you can mail a check with the payment vouchers to the U.S. Treasury. Again, I will show you those payment vouchers. You can pay online directly to the IRS website, and you can have it ACH out of your bank account, or you could even pay by debit card, credit card, even digital wallet like PayPal. Again, another tip, if you find yourself not able to pay those quarterly payments, you might want to just pay it on credit card. Or you could apply for a payment plan with the IRS or even request a delay in collection. So let me show you the form 1040 ES. So this is the longest one out of all of the ones all the forms that I showed you today. This one's 12 pages long. There's a lot of instructions here. But as you scroll down here farther, you'll eventually get down to self-employment tax and deduction worksheet. Again, it's kind of from your ES or your SE form. Then scrolling down, here's your tax rate schedule. So you'll be able to calculate your actual tax depending on what your actual taxable income is. And then this is your actual estimated tax worksheet. So this is where you enter your gross income, and then you'll be able to follow the instructions here and be able to say how much I should be paying. Once you're done with that, then you can actually, like, they have a little record keeping right here. So you can type in what you want to, how much you paid, the date you paid, all that kind of stuff to keep for your records. And then here's your vouchers. Again, it gives your name, what tax year, how much you're paying, all that kind of stuff. So you can tear this off and mail it to the IRS, or again, you can just pay it directly online. And there's 4 different vouchers there on that form. So yes, I see someone. Yeah, you said I thought they were due no later than October 15th, but yes, it's always a weird, the federal government definitely made it weird. I always had in my brain whenever I first started doing accounting, why isn't it on the quarterly timeframes? Why isn't it due October 15th? Why isn't it due July 15th? But for some reason, the IRS wants them those 2 months or quarters a month earlier. I don't know why they do that, but yes, I see that comment in the chat, and it does definitely throw me off as well sometimes. Next item, I want to talk about tracking your income and expenses. So again, you're doing a side hustle here and you really want to be able to track that income and expenses. Set yourself up for success at the beginning. Don't get throughout the year. And then I have a lot of clients come into the tax office and say, here's a box of receipts. Can you get my taxes done? And again, whenever I see that, I already know that they're going to lose some deductions just for the sole fact that there's no record keeping for that information. Again, if you miss a receipt, you could potentially lose out on a deduction and pay more tax. So again, make sure you're keeping track of all those types of things. So an easy way to track these items would be, you could go as simple as just Excel spreadsheets. Again, you could do that, export your maybe your bank information, but definitely there's multiple different ways. And then some accounting software that can be simple and easy would be QuickBooks or Sage or even FreshBooks. There's many different accounting software out there that you can use. Personally, I know QuickBooks the most. That's what we use mostly for a lot of our clients. So I can explain a few of those features. There are different levels of QuickBooks, ranging from self-employed up to the most extensive online version of accountant. Again, I don't even use accountant for any of my clients currently right now. Most individual companies need the self-employed essentials, and really plus might be even over their head. The cost can range from about $30 to even $85 per month, and that's without any discounts provided. Again, remember these costs are deductible for your business because again, it's all related to your business. So good to know there. The system will also allow you to link your bank accounts, link credit cards, and again, provide you a platform to categorize your income and expenses properly. After everything is categorized, you'll be able to run a balance sheet and profit loss. And again, it'll let you know if you're making income, if you're losing income, and as well, you can run it for different periods of time. So especially comes the year end and you need to go talk to your tax professional, you could be able to say, here's my balance sheet and profit loss, and they will love you way more than if you give them a box of receipts. I can tell you that for sure. I deal with that on a daily basis. Again, the big key is to separate your personal expenses from your business. That is, again, I have that happen a lot. A lot of clients love to do their personal information in their business, and it's not a good way to do it. It opens you up to more liability, all that kind of stuff. You want to capture these costs properly, since if it is business related, it is deductible. If it's personal, it's not deductible. Some other tips that I want to mention to help separate these costs would be maybe opening a credit card that's solely under the business, or maybe even opening a bank account that's directly for the business, so you can do everything directly out of that, so you can separate personal from it. Again, use a different credit card for personal related expenses. Remember, tracking your income is greatly needed and will help you in the long run with filing taxes and potentially lowering your taxable income. So, fourth and final poll question. Let me pull it up here. So the last item I want to discuss today is business entities and setting up the different types. This poll question will allow me to see what type of companies everyone is working with currently, and as well be able to talk about each one individually. Maybe you want to go from sole proprietor to something else. So maybe you'll learn some things about these business entities today. Again, big thing is, and I can't stress enough, talk to your tax advisors, your professionals there, and as well talk to your lawyers, talk to Mike, talk about whenever you're setting up your entity to help you reduce your taxable income when it comes down to it. Give everyone about 10 more seconds. All right, let's end this poll. And we can see about 44% of you are sole proprietors, 11% of you are S Corp, 6% are C Corp, and 39% are LLCs. Now, again, it's a little bit of a trick question, but LLCs, you're ultimately going to eventually elect to be one of those top 4. So that's the big key there. All right, moving on to business entities. So the 5 that I want to talk about today is the sole proprietor, partnership, LLC, and S Corp. Whenever you're setting up a business, you must decide what form of business entity to form. Depending on the entity that you decide, this will tell you which tax form you will be filing at the end of the year. The decision has legal and financial implications for your business. The amount of tax you owe depends on the entity you choose, and also the risk exposure is determined by the entity type. So again, talk to your legal professionals. They are the ones that you really want to work with to set up these businesses. So first, I want to talk about sole proprietor. It is the simplest business entity. This is where someone who owns a business by himself or herself. You're one individual owning the business. You're automatically a sole proprietor under the law if you launch a new business and are the only owner. With this type of entity, you will be filing directly on your 1040 and will pay self-employment tax on all taxable income. Some advantages of being a sole proprietor is that it's easy to start, and tax filing is very easy as well. Some disadvantages, the biggest disadvantage would be that you're personally liable for all debts and liabilities. So if you get sued, it's on you personally. The second entity would be a general partnership. It is very similar to a sole proprietor, but there are 2 or more owners involved with a partnership. For a partnership, you will be filing a Form 1065. So there'll be 2 different tax returns that you'll be having to file at the end of the year. And again, when you file the 1065, you will receive an individual K-1 that will flow through into your personal taxes. Advantages, again, would be that it's easy. You can split business losses instead of it all being on one individual. But some disadvantages, again, all partners are personally liable. And again, partnerships, you can get into disputes among the partners and during the course of business. The third entity that I wanted to talk about, skipping down, is a C corporation. C corporation is an independent legal entity that exists separately from the company's owners. So again, who has control of the actual corporation? That would be the shareholders, the board of directors, and officers. There are many more regulations that come with this type of company. For a C corporation, you'll be filing an 1120, and the C corporation will be paying taxes as well directly to the government. There is no tax flown through to the individual side unless you pay out dividends. Then you will pay at the C corp level and on the individual level. So that's one of the big disadvantages, is you face double taxation. Again, some other disadvantages would be that they are more expensive to create, and owners cannot deduct business losses on their personal tax returns. You would just carry those losses as the C corp moves on, but you can offset that with future income. Some advantages is, again, the owners are not personally liable for the debts and liability, and there are additional tax deductions, and as well, owners pay lower self-employment taxes because it's all flown through the business itself. The fourth entity would be S corporation. S corporation takes a lot of attributes from C corporations and sole proprietor and partnership. So it's a mix. The big key is there's no corporate level tax for S corporations. It is passed through to the owners for tax purposes through K-1, just like partnerships. Advantages would be that the owners are not personally liable and no double taxation. A disadvantage would be that they are more expensive to create, and you still need to comply with a lot of corporate formalities. And then the last entity that I want to talk about is the LLC, or the limited liability company. The LLC takes features, again, from both of these other 4 businesses above. You will still have the liability protections of a C corp and S corp, but also have less paperwork and requirements. the big advantage is that you can choose what type of entity from the 4 above that I talked about that you will be taxed as under the IRS. So you could elect to be a C Corp or an S Corp or even a sole proprietor underneath an LLC. So the most common form of small businesses, everyone sets up pretty much an LLC, and then a lot of them then elect to be just a sole proprietor. But again, the LLC gives them that shield of protection, so they're not personally liable. So with that being said, just give a little recap of what we talked about today. That was the last thing I wanted to talk about today. Again, we went through and we discussed multiple tax forms that you'll need when you are filing, when you have a side hustle. We went through deductions that you're allowed to take if you have a side hustle, how to calculate those self-employment taxes and estimated taxes. Again, when to file those estimated taxes, big key there. Best ways and tips to track income and expenses. And lastly, we discussed the different types of business entities that you can elect. So again, can't stress it enough. I told you guys already, talk to your tax professionals, talk to your legal professionals. They will be able to help you out and show you what's going on and give you the best advice for your future. So it was definitely it was a great pleasure to speak to all of you today. Again, I want to thank Mike and FIFIC Law Group for the partnership through these webinar series. Again, if there's any questions, please let me know. I'll gladly help, and I'll take a look at the chat and Q&A just to double check if there's any questions outstanding right now.
Yeah, there's one in the Q&A pod. May I deduct the monthly cost of my Legal Shield membership, which is required for me to make my commission income?
In my eyes, it seems like you should be able to deduct that cost as you are probably a 1099 person. You could probably get that income, and you should be able to offset that monthly membership as membership dues off of that commission income. I would say yes, that's allowable. Again, talk to your tax professional. They will definitely ensure that from that standpoint.
Great. So right now, Ray can go through the chat, look up some things, get some final answers on things. But overall, I'm really happy with today's session. Ray covered a lot of ground in under an hour, and that's really what we try to do here. We try to keep these pithy, keep these short, make sure that we're using your time the best way that we can. At Donnelly-Boland, we're always here for you if you ever need help. So if you need help with taxes or accounting, we also provide consulting and operations and communications and HR support. We're here for you. Keep in mind, you're going to be getting an email from Donnelly-Boland giving you a recap of the event, the actual URL to this session, if you want to go back and check that out, as well as a brief survey to be able to tell us what you want to see for the future.